Dear viewers, welcome back to my channel. In this video, a problem is solved on computation of income from other sources. Kindly watch the video till then, like it, share. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. It is an example of computation of income from other sources. So the problem runs like this here, Mr. So let me stretch here. Mr. Somanna furnishes you the following information relating to his investments for the previous year 2019-20. Rupees 60,000, 8% government securities, then rupees 40,000, 9% port trust bonds, then rupees 2 lakhs, 10% debentures of Cement Syndicate Limited, then rupees 40,000, 9% tax-free debentures of A Limited in the bracket unlisted on 1/10/2019. Mr. Somanna sold the port trust bonds at a profit of rupees 4,000, and on the same day he purchased rupees 64,000, 12% municipal debentures after taking loan of rupees 20,000 at 16% per annum interest. He paid a commission of rupees 200. He paid a commission of rupees 200 to a broker on purchase and sale of investment. The collection charges amounted to rupees 100. Interest is payable in each case on 1st January and 1st July every year. Compute his income from other sources for the assessment year 2020-21. So now let us discuss this problem before we go for solving here. So investment in interest on government securities is taxable here. Then interest on port trust bonds is taxable, but it should be noticed here that these bonds are sold by the assessee on 1/10/2019. So and the interest is available payable only on the 1st January and the 1st July. So on the 1st July he was holding such bonds. So he is eligible to claim only 6% interest. Interest for 6 months only. Then rupees 2 lakhs 10% debentures. These are less tax commercial securities. So as the investment is given, interest on the same is need not be crossed up here. Then 9% tax free debentures of A Limited, it is to be crossed up here. Then he has invested rupees 64,000 12% municipal debentures. So here the interest on municipal debentures is taxable, and it is it can be claimed only to the extent of 6 months here. Then he has taken a loan of rupees 20,000 at 16%, so which is deductible here. So he has obtained loan in the month of October. So October, November, December, January, February, March. So 6 months interest can be claimed by him. Then he has paid a commission of rupees 200 to a broker on purchase and sale of investment, which is not deductible here because the brokerage paid, commission paid on purchase of investment, it will be included in the cost of investment, and whereas which is paid on the sale, it can be deducted from the selling price here. The collection charges amounted to rupees 100. It is deductible here. So now let's go for working out here. So computation of income from other sources. So name of the assessee, Mr. Somanna. So previous year 2019-20. Then the assessment year 2020-21. So now let me insert 3 columns here. So particulars, rupees. So the first one, interest on government securities. So here it is 8% of rupees 60,000. So which comes to rupees 4,800. Then the next one here, interest on port trust bonds. So this is taken at 9% off. Let me write in the bracket here. So 9% of rupees 40,000 multiplied by, or for 6 months. For 6 months only we should calculate here. So 9% of 40,000 comes to 3,600. So it comes to 1,800. So here it is 1,800. Then the next one here, interest on debentures of Cement Syndicate Limited. So this is 10% of rupees 2 lakhs. So which comes to 20,000. So 20,000. Just let me make an alignment here. So 20,000. Then we have got interest on municipal debentures, which is given as a 12% off. 12% of rupees 64,000. 64,000 for 6 months. For 6 months. So when you calculate here, it comes to 12, half of that, 6 4s 24, carry 2, so 3,480. So it comes to 3,840. So 3,840. I think the investments are over now. So then let us take the total here, so that I hope there are no other investments are remaining here. So 3,840 plus 20,000, 1,800 plus 4,800, which comes to 30,000 This comes to, this is a gross income here. So gross income, that comes to 30,440. So 30,440. Now let's deduct here. So less deduction under section 57. So first we shall take interest on loan for purchase of municipal bonds, municipal debentures, so which can be calculated at the rate of interest here is a 16%. So 16% of rupees 20,000 for 6 months. 6 months. So which comes to here 3,000 to 1,600. So 20,000 16% for 6 months comes to 1,600. So rupees 1,600. Then we have got one more, that is collection charges. Collection charges, that is 100 rupees. That is 100 rupees. So when we deduct here, so 1,700. So 30,440 minus 1,700, that comes to 28,740. So this is income from other sources. So that comes to 28,740. So now let us write a note here. So note, so one here, interest on port trust bonds, interest on port trust bonds is calculated for 6 months as they are sold during the year. Next, number 2 here. Then interest on loan for purchase of municipal bonds is deductible from the income for 6 months only. Then commission paid for purchase and sale of investment. Sale of investment is not allowed as deduction as the cost, as the same is included in the cost and it is deducted from the selling price here. Then the next one here, I think only there are 3 notes. Collection charges are allowed as a deduction here. So this is how we need to calculate the income from other source. So let me make this board here so that it will be more clear here. So this is how we need to compute here. So only thing we should notice that here, interest on loan or interest on loan borrowed for the purpose of purchase of securities is allowed as a deduction but not as the commission. Thank you.